Hi, and welcome back to the Conscious Day Trader. Today is a very exciting day. We're going to have on the Conscious Day Trader show the first ever Vanguard. And the first ever Vanguard who's going to join the show is Jasper. Jasper joined the Vanguard not very long ago, and he will tell us a little bit about how he found us and what he thinks about the Vanguard. I get so many questions about what is the Vanguard and why should I join it? And today, I was going to jump on a call with Jasper to go through one of his trades because I think it was very good opportunity for the whole Vanguard group to learn from it. So we're going to discuss a little bit about that. But first of all, hi Jasper, welcome to the show.
I can't take no loss. I don't even know what it costs. I hit the ground and I go off.
Tell us a little bit about who you are and how you found us on the Vanguard group.
Yeah, so my name is Jasper. Thanks for having me on this call. I found your channel in the beginning of this year. I got into trading 2017. I started out with crypto, started trading different strategies, Bitcoin, Ethereum, different small coins. And along the way, I started to learn about what trading actually was, because looking back now, I wasn't really trading. I was just gambling, literally trying to buy low, sell high, or the other way around, trying different indicators. Had some success, but nothing consistent or sustainable. But I was really intrigued by what trading actually was, so I kept on learning, discovering new ways to trade. And that's also when I ran into the difficulty of everyone is preaching their own ideas. So like one trading mentor or YouTuber will preach for having as many indicators as you can on the chart. The other one will say naked charts. So I was trying to find my way around it. And I guess as many learning traders, I was trying to combine things, shifting strategies when things didn't work. And then I got into ICT trading when I moved to Forex, because I had the idea that there would be less manipulation in the Forex markets than in crypto, and more predictable price swings and price action. And then when I got into ICT, I started looking more for ICT content, and then I came across your channel. And I also got very intrigued by your way of trading with the repositioning, and that you managed to stay green for so long. Because for me, apart from the technicals, that's very interesting. Also, the whole mindset, the psychological approach to trading is very important, and that's something that really interests me. And then a few weeks ago, I decided to join your Vanguard group because I was also looking for a community to share ideas, to bounce ideas off, and to just be able to, I guess, talk and relate to people who are approaching trading in the same way and have the same mindset. Because in the end, being an individual trader is also very lonely, and I guess it really helps to be able to bounce off ideas to others and to just discuss what you're doing and why you're doing certain things, and you can really learn from everyone there. For me, Vanguard is even in the few weeks that I've been there, really helpful because there's a great group of people there that are all willing to put in the work. Everybody wants to work on themselves as a trader, so not only about the technical side of trading, but also really there's a lot of focus on mindset, on to grow yourself as a person, as a trader, where you want to be, and that's something that's extremely valuable.
Awesome, thank you, Jasper, for that. If you could say one of the 17 videos, which is your favorite video that we've done so far in the Zoom?
I know for a lot of people it will probably be the one about repositioning, which was very interesting. But for me, what's even more interesting are the NLP and parts work videos about how you can relate to yourself having the different parts, and why you take the actions you take, and how you can work on that to become more balanced and to avoid taking the actions you don't want to take at some point when you're in a trade or when emotions start to become part of it.
Awesome. Right, we're going to jump into what we're here for, is to look at one of your trades. It caught, I would say, about 90% of the people that were trading pound dollar during the CPI news were either caught or they were very, very happy because price did 250 pips within a couple of hours. So if you're on the wrong side, which we're going to see today, and if you're specifically on the bottom of that wrong side, is it possible to get out? That's what we're going to see today. And we're going to talk a lot about repositioning. We're not going to explain a lot about it because we know what we're talking about, but we're going to show it since it's going to be beneficial for you and for the group. So what we're going to do is, first of all, if you can share your screen on TradingView and just give us a little bit of a quick introduction to, like, not why you entered, but whereabouts your entry was and your thought process of how you were going about thinking this in terms of risk management, and what was your thought process about repositioning?
So my initial entry was here. So really, if you look at the move of the whole day, my entry was exactly at the bottom, pretty much. Looking back now, this would have been the perfect long. Thing is, though, I was in a short. I entered here at this point. I went short for a number of reasons. My overall bias, if I zoom out a little bit, was long, because if you look at this move up and how price came down and then started to go back up, that for me was a confirmation that the long-term bias was long. But then when we made this move up and we stopped here, came down, came back here again and rejected and started coming down, that for me was the idea to go short and catch a move down before we would be continuing up.
Let's pause there for a second. If you can throw it onto the daily and we can still see your entry. If you looked at this daily, would you be willing to short this position? There's no right or wrong answer. It's just seeing how your thought process is around this chart.
Yeah, so I think, but that's mainly in hindsight, I mixed up a few of the things I'm looking at from higher time frame perspective and lower time frame, because how I see this daily candles is we were going down, then we stopped here, which on this move was around, I think, around the 70% retracement, and we started going back up. Then this daily candle closed above this one, so that would be also for me confirmation that the daily bias is long. Price opened here and then started to come down a bit. So my idea would be for the short that we would fill this gap that was here before continuing up.
Okay, great. So at least it doesn't matter if you were long or short, right? Because it's impossible to predict what's going to happen. All you need to do is, can you justify your entry? That's all we're looking for. Because CPI might have been different news, and you might have been correct, and it would have pushed down into your profit, and then you'll be like the cleverest person in the world because you managed to pick up that move for 250 pips the other way. But if you just throw the 4 hour as well, so we've seen the daily, if we jump on the 4 hour, and then we can see where the entry is. So, okay, so you've got just run me through what you see here.
Yeah, so we were here. So what I saw was we had to move down, we started to come up, and then we ran into this area here where the candle closed bearish, and I saw this as an order block before going down. So that was for me one of the reasons to try and short this move, thinking that it may go here or here before continuing up, closing this gap on the daily. And then with the idea in mind that I would be repositioning this trade if it would first come up more, because the stop was so wide, and I was trying to combine the two different methods of repositioning. In the end, that take profit would also be moving up, which would then enable me to stay in the trade and still reach my profit, even though...
All right, great. So we're going to look at the actual management. Even if you look at this now, you're seeing lower highs. It hasn't broken the high yet. So it kind of looks nice, like the short side. Yes, we've had those sort of 1, 2, 3, 4, 5, 6 blue candles and one small black candle there in between. But overall, you wouldn't be extremely confident. It can go either way at this moment of time. You could argue that on the left side, you had those two big blue candles, which they filled that fair value gap on the 4 hour there. So you're saying it's reacting from that and it's pushing up. That can be a justifiable move up. But then you also had the break of structure on those 3 black candles, which were coming down. So you could say we're breaking down, and we even pushed further into the fair value gap, come to fill up the fair value gap on the downside, and you've got a justification of why you want to trade it down. Does it matter? No. But if we do have a good, if we are good in reading ICT concepts, if we are good at finding our edge is to find a good bias, we should use it in trading. Now, the good thing about repositioning is no matter, as long as you don't get the absolute low, which we did today, so we're going to see how that's going to handle repositioning. But if you're roughly around, if you're trying to reverse the price, because that's what we're trying to do, you're trying to reverse this move up downwards. If you're close enough to the top, then it should be able to manage the trade easier. In the other way, if you're close to the bottom, you don't have to get it correct, even within 100 and 150 pips, if your stop allows it. Okay, so we have an idea of why you're in that. So I can see that you've got 122692 as your first entry. Is that correct?
Yes, that's correct.
So we got in. So we're in at 015. From my discussion with you before, that was a manual error, I believe. You wanted to go in with a 01, which will be $1 per pip.
That's what I was going for, but indeed there was a typo and I entered 0.15 lots instead.
Okay, so we're in with 0.15. What are you willing to risk? What's your, I talk about like your sort of what are you willing to risk in that trade? What is your hard stop?
My hard stop in this case was $1,000.
Yeah.
And that sounds rather large for a 0.1 lot position. But that comes with the idea in mind that this will not be the only position, but that I would add multiple positions throughout the trade, which would remain that overall $1,000 risk.
If we think about that risk for a second, how long does it take you to make $1,000 normally?
That would be around 2.5 weeks.
2.5 weeks. So are you happy to risk 2.5 weeks within one trade?
Yes, I am.
You are. Okay. That's the sort of thing we need to be aware of, because that is what's on the table.
That may also sound very counterintuitive, like we have no risk management. But the thing to understand, because the only reason I'm willing to take that high risk on the trade is because of this repositioning, and what it has shown me over the last couple of weeks, and what I think was also very clear in your track record, is that because of that repositioning, even if you are on the wrong side of the trade, you can still manage to get out in profit. Using this strategy and this approach, you have a 90% or even higher win rate, which means you will have winning trades maybe for months in a row, and then a few times a year you will wipe out 2 weeks or 2.5 weeks worth of profit. That still gives you an enormous amount of consistent profits, which makes it worth it for me. And also from the mindset and psychological point of view, this works better for me than having trades with for example, fixed 2-to-1 risk reward, which I was doing before, where it would really be on, let's say, a 60% win rate. It still stops you out 40% of the time. And yes, you are profitable, but it's not something I felt very comfortable with from a mindset point of view.
We have to be very careful in terms of like comparing, because you're going to become the trader that you're going to become, and it's okay to look at someone else, like we said. Yanis had 6 months of green months. That means that this system is going to be green months for everyone. Unfortunately, it doesn't actually work like that. We need to identify what Jasper, in terms of what is your performance, where are we at? So we have an understanding now that you can make about 1,000 in 2.5 weeks. That's good. How many weeks of that historical data do we have that? How many weeks have you been able to do that?
I've been able to do that, and that is a combination of live trades and backtesting. I've been able to do that since August.
Since August. Amazing. So we have a very, very big data set that we're quite comfortable that you can do that, right? So for me, all sounds good. Trying to make, I remember you saying you want to make $100 out of this on each occasion of this trade. Is that correct?
Yeah, because that gives me $500 a week, pretty much, which leads up to this 1,000 in 2 weeks, and so on.
All right, brilliant. So we have a round understanding of what you're trying to achieve as well. So that's quite interesting. And then now let's see. We're in the trade, and if you jump the trade forward, you're seeing things happening. Run us through what and I know we've done a lot of work on the psychology and NLP work. So what were you thinking here, and how was your process?
Best thing for me with this trade, and I also wrote that in the Discord, is I was completely balanced in this trade. There were no emotions, even though I saw price going against me to such an extreme, in such an extreme way, because also the move when the news came out was pretty extreme in terms of pips. And I think before applying this method, I would have been going crazy or become very emotional or be annoyed that I would be stopped out and then the move would have happened. And even though I saw it coming up, I was still pretty balanced. The only downside maybe was that I was monitoring the trade, but I was also working, so I couldn't be on the charts non-stop. And then the move, when it actually came after the news, happened so fast that the first reposition I was able to do was already pretty far up.
Okay, so what was your planned reposition compared to where you get your second reposition?
So the first idea had to reposition was around here where price is now.
So if you drag a ruler from your first position to that position there, how far is it?
So that would be around 25 to 30 pips in this area.
Okay, so we're looking. Would that fit into your repositioning distance? Did you think? Yes. Did you have an idea of how far you want your repositions to be?
I didn't have a fixed number for that. I wanted to base them on more on price action and where liquidity would be in the market. So this would be the area where I wanted to take the first position, with the idea it may take liquidity here and then continue to move down. But that didn't work.
Yeah. So, and then it spiked up, didn't it? So it spiked up, and it took us to, where was your second entry? There it is. Look at that.
And the reason I didn't, because it actually came where I was anticipating the first reposition. The reason I didn't take this is because I was in a meeting and I couldn't enter.
We would have taken the 25 pip, but I guess luckily we didn't. And then that move. Then it pushed all the way up, and I can see your second position now. So that, how many pips is 82 pips? So we've got first position, second position, 82 pips away, and then we've got the third position. So when you've entered your second position, what was your thought process then? Because suddenly now, instead of being 25 pips, you're 80 pips in.
Yeah. So the idea was, I am in the trade. I have only 0.15 lots in, and I have the 1,000 hard stop. So I have a lot of room to manage this trade. Then the other idea was that it reacted like with a very big candle to the news, which was interesting for me because I didn't read the news as being that extreme to warrant such a reaction. But anyway, this is what I had to deal with. This candle was also, because it started pretty close to the entry where the move started after the news. So that was also around 80 pips that it moved suddenly. Then there was this level here. So my idea was, okay, there was fair value gap here. We took already all this liquidity with the move. And what you often see after this news events is that it spikes in one direction and then starts to either trickle back down or goes the other direction. So that's why I decided to add a position here. But then,
what is interesting, because I like how you've shown this, because it can show, you can see how your positions are being squeezed as you're going further and further from your first entry, and you can see that by your gray zone, right? So your stop is getting, but you've got a huge room on the first one, but then suddenly you're actually squeezing quite quickly on the other side. I remember on, is it the third and fourth position, they're like literally identical. They're very close to each other. Can you run us through that thought process there?
Yeah, you can also see I wrote it here in the overview I kept of these
Okay, it's an
entries.
error.
Yeah, that because what was happening is, and that I see more often when there is news and then there's a lot of volume and there's a lot of trading. I push the entry button because at this point we were at this level here, and there was also this fair value gap here, and also on the higher time frames there was a level here. So I wanted to get in another position again with the same logic. We moved all this way up. This would be for me a logical way where it may retrace a little, and I pushed the button and nothing happened. So I pushed it again, and then a few seconds later there were two positions in.
Yeah, we've all done that. It just takes a bit of time to MT5 to register that entry, and then you're like
around the same level. Yeah.
Okay, so look at this, right? So we've had a few things that have gone against us. However, with your tools and the NLP work, you're in a balanced position. Someone else might look at this and be like, I got in the absolute low, I missed my repositions, I managed to get 2 entries on a position, so now I'm double exposed, and it's even pushing higher. So kudos to you, and it speaks a lot to how much time even in this short time period, you've applied what we've been doing, and it actually is showing. Then we got 5th, 6th, 7, and 8. So 8 was the final position. Yeah. Tell me about 6 and 7, because that looks tight as well.
Yes, so for that we need to zoom out a little bit. So I'm on the hour now, and there was quite a large gap here that has been filled a little bit, but then it started to come up. And I believe, if I remember correctly, that was also visible on the 4 hour. Yeah, there was also the gap here. So again, here I was like my hard stop was around this area here to where I would hit the 1000. So I also knew that the positions here will not have such an impact on the stop loss level anymore because I'm already close to the max level. So the closer your entry is to where your stop loss is, the less it will bring down your stop loss, in this case of a short. But it will actually have a tremendous impact on where the take profit level is because that moves all the way up as well. So the 6th one was here in this fair value gap. Then we broke through it and there was a little bit more here. So then I decided to add another position because in that point I was also thinking it has moved up almost 200 pips now, or already 200. The reaction will come, and the higher I'm in this move, the more positions I have in on this higher end of the move, the closer my take profits will be, and the more chance I will have, or the bigger chances that I will be able to get out of this trade, break even or for profit. So then the last entry, the 8th entry, was at the top of this gap here, and just below the hard stop that I had here.
If it moved, how many more pips would you be stopped out?
Yeah, I think it was around from the 8th entry or from where price went in the end.
From your last entry?
From my last entry, it was around...
I remember you saying about 6 pips, was that correct?
From the entry, it was around 26 pips, but price came to like 6 or 8 pips.
It came to 6 pips. So we were 6 pips away from taking a 2.5 week loss. Now, I talked to you in Discord and you were like, I would be happy with that because I was balanced. I was doing this, I was learning this, and you would be, even if that had happened, obviously you don't want that to happen. Just before we go into a little bit of, I can run you through my thought process around this. Just give us a little bit the outcome. So what happened in the end?
Yeah, so what happened, and that's also what I refer to in the Discord as I was very happy with this trade, although that may sound very weird because it was potentially a significant loss. But the reason I was happy with this trade is that I followed the process. I didn't take any impulse reactions. I didn't close it prematurely. I didn't increase the risk. And throughout the whole trade, there were hardly any emotions. I was very calm. I was very balanced, and I could look at it from a pretty objective point of view. Because also, when we were discussing like the types of reactions you have after this type of news events, the amount of pips price went up after the news was also really on the extreme side of what it has historically reacted to news. So all these factors I was taking into account, because also if over the course of a few months you are able to do this successfully, and then there is an extreme event like this one, because I would still refer to this type of news reaction as pretty extreme, then that's a fair reaction if I would be stopped out for the max loss in such a trade. So in my book, I did everything correctly, and then yes, if I would be stopped out, that would be a painful loss, but one where I would not have to regret the actions I took. So what price did? It came up, and there you see now how close it
That
actually
is close.
the hard. That was very close, but that was in late in the evening, so I was just looking at it every now and then on my phone, and I was just feeling calm. The next day, it started to come down. There was one more news event the following day. The 50% level of this whole move here, which I was anticipating it would retrace to, was somewhere here. And this is where I had a little bit of change of mindset and approach to this trade, because I wrote initially that my plan was to close the trade around that 50% level. And the amazing thing is, I would have made a profit there. So despite entering the first entry completely at the bottom of the move, if I had closed it here, I would have made a profit. But when the news hit and it started to come down, I was at some point at 1/4 of the max loss I had been in drawdown in here. And that's why I decided to be happy with the trade and close it for a relatively small loss.
So instead of $1,000, how much did you close it for?
$200 loss.
Okay, happy days. Now, the biggest, I think I mentioned that in the Discord as well. The biggest thing is closing that trade. Theoretically, if we think about it, right, with even everything that's happened, we're still within our limit that we have an acceptable limit that we're gonna take a $1,000 loss. So if we think of how our nervous system and how our capacity is working, you've been on this for 2 days. So soon as something positive comes up, it outweighs anything that's happened in the past, because you're like, this is the moment, this is the most positive thing I've seen within 48 hours, so I need to do something. And going forward, this is something that we need to be aware of when we're in trades. It's almost like that balance, and you can do perceptual positioning on this that we've done yesterday. Like if you had yourself see from the second position looking in, what would that second position saying that before you press the button, and you might have done it anyway, but before you press that button, that second position might say, wait a minute, let's have a look at this picture, because we're still in our repositioning that we wanted to be. Yes, it's been 2 days, but now everything is starting to look like we were planning to do, like we're going to risk manage this. Likewise, you might argue that this then might fly all the way to the top, and you're happy with a $200 loss. But the only thing we need to be aware of, what the decisions we're making now, similar decisions are going to happen in the future. So if you do want to have a habit where you're going to stick with this making you money, you have to come from a perspective, maybe this decision was right in this moment, but if I had done my positioning better, if I had stacked them, I wasn't at work and I could have gotten in at different levels, then I would have been able to just be calm and still be able to make money out of this trade, even though it was horrendous. In the Discord, I've talked about like the fixed pip repositioning, where you have like 20 to 25. You have done a little bit like I trade, where you've looked at liquidity, you've looked at ICT concepts. Where is the fair value gap? I do, instead of taking 25 pips, I'm going to get a little bit more. One thing we need to be careful of is adding very close. So I know you said that, we've gone 200 pips to the upside, and this might be a swan event, but we don't want to lead our analysis and our decision making because of the swan event. Because tomorrow it might not be a swan event, and suddenly you're adding that sixth and seventh position again into what should be, let's say, your fifth position, and depending on how you have done, if you take out the error of the third one there. So just keep in mind that a lot of things were not ideal and it worked out, but we want to be focusing on what we should be doing and what we're going to do in the future. So tomorrow, when we get into a new trade today, like, no matter what happens to the market, this is my hard stop. This is how I'm managing it. Yeah. This is my decisions on taking. You might have a minimum pip. You might say, as long as it's more than 20 pips, I can reposition, and you just wait. Other people, I know Martin, for instance, he will do 20 pips and spread it out. Sometimes he does different, but just an example. Let me just show you for a second the Excel sheet. All right, so I know you've used this before, and now you've actually created your own one, which is great. But I've inputted the stuff that you said. So we're looking for 100 sort of profit and 1,000 for a hard stop. And I put it on 10 repositions. You did 8. Would you say that 8 is your max? Do you aim for 8, or it doesn't matter how many it is as long as it's within your 1,000 stop?
No, I would definitely say 8 is on the higher side.
8 is on the higher side. Okay. So very quickly, let's say we put 8 in there. With a 20 pip, your first position, you'll be looking at $152 there, profit, if that went to target. So that sort of like lines up in terms of if I was going to give a 20 reposition. What I would like to do is jump on TradingView. So what I've done is I've changed this to the repositioning tool, and that's just 20% on there. So I put 20 pips on that. And we're going to put that there onto the 20 pip. So then what we can see is we've got, put that onto the entry. So we've got 11. So out of 11, let's go on to the 5 minute. And we're just going to drag this here. So on a fixed stop, if we did the fix, we would get entry here, entry here. This never got closed. Yeah. And then it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That wouldn't have clipped this, so you would have got in here. So this is your 10th position. So your stop, you would have been stopped out with a fixed position. Yeah. Do you understand that one? Yeah. So fixed position with a 200 pip move on the pound dollar wouldn't have worked. Now, we've done a lot of back tests with the guys. It's extremely rare where you're going to see a move like this in one direction without any retracement on the news, right? So this retraced from the 14th of November. It came down to about, that must be let's have a look. Change that one. Retracement to retracement. So it broke the 38.2. It broke nicely below the 23, continued. So like you said, there was high possibility that it will come lower to that 50%, and it did there. So as a fixed trade, we would have taken the loss. Now, how many times does that happen? Yeah. When I don't trade with fix one, but even if we trade for fix one, I believe that it would be like NFP events. It would be areas where there's aggressive moves in direction, or in one direction without any bounce back. And obviously that's going to be your stop. You're going to be stopped out. Now, I like risking 1 week. I do think 1 week is good because it doesn't feel like a mountain that you can take back. You know, if you say 2.5, if I told you it takes you 2.5 to make 1,000, how does it sound like you would make 400 in a week? It sounds a lot easier, doesn't it? Which is pretty much what you would be making, let's say 450 in 1 week.
Yeah, so maybe one distinction to make here. The reason I'm willing to risk this amount is because it's on the challenge account. So I'm purposefully risking a higher amount because I don't want to be trading that challenge forever. Mm-hmm. So on a live funded account, I would max it indeed to a week.
Yeah, even if you put like 400, which is pretty much 4 days of ATR, look how much room you've got. Even on this aggressive move of 200 pips, you're pretty much halfway where you can manage this. So it's, I would say, like, obviously you're going to do whatever you want to do, but 1,000 sounds like, you know, it's almost like a bit too safe in a trade. But it might, you know, everyone is different. That might work for you. So if it is 1,000, it is 1,000. It did work in this occasion, so happy days. Now, that's the fixed, so we can see why it didn't work. But look how close it was. If you had done 12 positions, it would have worked. And you might say, okay, well, what if you did 15 or 20? Like, I'm saying somewhere around your max, like 10. I very rarely, I think once in my life I've gone over 10, but they weren't fixed. But in terms of fixed, 10, 12 positions is where you should be maxing that out, because then your lot sizes are too big, and then it's just harder to manage. So let's take that out. A small adjustment, and this is something that you can look at repositioning, because we have now historical data. What would have happened if my stop was 25? Would it have worked? Because this is good information now, because we know that this is now the extreme of the pound dollar. Even though it didn't happen that often before, it has now. So we need to be aware of it, and we need to be prepared for it. So do we need to start thinking, and there's a reason I'm telling you about fixed, and you'll see why when we do the other one. Do we need to start looking at 25? Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. So this would have worked, and it would have repositioned 1, 2, 3, 4 times. So you would have retained 40% of your actual position would be retained, and then we can get reapplied if it goes higher. Because if I repositioned 1, 2, 3, 4 positions, these 4 positions then can go higher, right? So price,
so then you can keep.
The price would be 1, you would be doing another 20 above it. So you'll be doing something like that. 2, 3. So the risk, you've decreased risk by a lot, because what we do, as you know, with closing, we're not gaining any profit, we're just recovering units. So these units now are ready to be reapplied if price comes up. So what happens if price now does this? Yes, this would be heavy in drawdown, but we don't have all these units that we can apply for later. Now, obviously, we do have the taking profits as well from repositioning, and that would have worked in this occasion. So this is how I did it for 2 years, trying to figure out what part of repositioning fits to my psychology. This is why fixed for me didn't work so well, because I wasn't able to identify if I need to be 25 pips, 27 pips, 30 pips, 20 pips. Like I didn't have the confidence to say I need 25 pips in between and that'll be fine. So that's why I stayed away from fixed. But there's other traders that do that and it works for them. So if we take that out, if you can't do fixed, what else can you do? Which you've kind of done. We look at structure. So if we go on the hour, but even with this, you see how we decreased repositions. We closed 4 repositions and they would be up here. Look how far it would have to come to be at repositioning those trades. So that you're decreasing risk. And even if it takes one more out, now you're only dealing with 0.3 of your total position. So your risk is completely gone and you can start getting better price as it's coming higher. So let me remove these for now. So if we go back to your entry, we'll take the replay. So we analyzed, like we said before, this is where you got in. We saw this as a move down and it start pushing up. For me, the most obvious thing, and you've seen it from all the lives, is, where's my tool? Sell side here. That's the area where I'll be thinking to add. There's nothing here that I will be interested in. So that would be my second position above these highs. We continue, and that's the move. So I would have only repositioned once in this.
Yeah.
Even if you go, because I look at it from a perspective, if you look at the NFP events or any sort of news, CPI news, your first hour, and I shared that in the Discord if you remember, it's 50-50. You don't know what's going to happen. It can go up and down. In the last, since 2022 November, price was 50 long, 50 short in the first hour of the CPI. Now, what happened here? We had a long, and we also knew from the historical data that the range is going to be maximum 160 pips. So that's what caught out people because it did. This move is the size of, it's 220 pips. So a lot more than the historical data. On average, it would do around 80 pips on the CPI. So this was, like you said, it was this one event. Now, you might say, why would you not take these sort of liquidity here? Because look, our entry is pretty much on that liquidity area, right? There is an argument to take this here, which you did. If I throw on the 4 hour, normally it would clean up. Because we had 1, 2, 3, 4, 5, 6 candles in that fair value gap there, if you want to combine it as an entry. I would argue, yes, you can reposition there, but not more than one reposition because you're looking at one structure, looking at 2 structures. So that's your second. Where would your third be? The liquidity that we said. So even though I have in my mind, I normally trade about 5 repositions. Even if I have in my mind that I have another 5, where would be my next one? It's so clear when you see it. It's like, where's the next liquidity draw? Here, right? Because we have a swing, intermediate swing. There's no, you can argue, okay, you can argue about these and like, I don't want to be, the thing is, I don't want to be picky with my entries, right? So I don't want to find this absolute turn. All that matters to me is if this goes wrong, where is it going? And the most obvious areas that you can find, yes, we can look at monthlies like Scruffy does and all that, and you can have that side to you. Or from ICT perspective, you can do standard deviations. But for me, if you look at the price action, where do you see these clear swings? Here, you've got a very clear swing with multiple tops here, which is pretty much buy-side liquidity there. So that's why I said I would probably reposition once, because this is the area where it's obvious. All these, yes, you can justify them. Are they obvious though? I would argue there's not a lot of obvious areas here. right? It's not like a move like this where you're like, okay, that was an expansive move. These are like choppy, like if you're looking from an ICT perspective, it's quite fair valued in. Everything is moving down nicely. On the other hand, this is what you're looking. You're like, wow, okay, this is not efficient yet. This is not, well, it became efficient. That sort of candle. When you go to your left side, you're looking a lot of efficiency in price. Yes, you've got these small little fair value gaps there, but not big. This is just 4 hours, remember. So that's how I would go about in terms of my risk. Now, my first position, if I did, like we discussed, if we go to the 15, so we looked at that area there, that liquidity draw there. So my first position is 175 pips. Now, if I weighted 175 pips on a one lot, that's $1,750. That's pretty much 50% of my exposure, right? Because I'm willing to risk around $2,000 to $2,500. So I pretty much have another area like that. What was it? It was 100, something like that if I doubled that. When I see a move like this, I can think, you know it's news, you know it's expansive news because it was happening whilst you were adding positions. Your question should be, if I add positions here, trying to find this top, what's the worst case scenario? That should be your first thought. So I've added 3 and 4th position here, 5th, 6th. So now I've added 4 of my repositions in. In what area? In this liquidity draw. So I've added most of my weapons, if you want, or units. I've applied them to one idea, that this liquidity draw is going to work out.
Yeah.
So what we need to do is like, how much do we need to weigh this liquidity draw? And my thought process, yours might be different, and it will be different because you're a different trader. But my process is, I'm willing to add one reposition there to see if that idea is going to work out. Because I only have 1 or maximum 2 repositions left here, because I'm going to do 3 to 4 on this. So if price comes up, am I willing to take something here? Let's see. Probably here. Here is where I would be starting to think, right, I need to be involved in this area here. And that's how you can start going away from your fixed. Both work. The fixed, you need to be a little bit better with calculations and maths to get it right in terms of and knowing the asset really well, knowing how the pound dollar moves and how it reacts. So I don't know if that was helpful for you, Jasper. I just wanted to show, like, with the knowledge of what you were trying to do, this is the sort of, think about the risk first. If you do that with your balance mentality now that we've talked about, think about risk. How am I getting out? Where am I getting out? What's the worst thing that can happen? Can my repositions deal with it? And if they can't, what do we do?
Yeah, and that's a good point of view, because the reason my initial risk in pips was so large is because I based it on that monetary value, and I want to have the room to reposition, knowing that that will bring down the stop loss. So in this case, that worked just barely. But it's very interesting to see where you would have added one reposition, because where you drew the liquidity zone, that's where I had in the end a hard stop loss, because I was thinking that's really like the end of where this move may potentially go before it will show some sign of retracement.
Yeah, and think about it. Where you have your hard stop is where liquidity lies. Because think of how many people will be thinking the same thing. I'm going to put, it can't go further than 200 pips. It normally does 160. It's not going to do 250, is it? And then what it does to do, boop, takes you out and then releases down. And that's where ICT kind of nails it in terms of, the stop hunting and identifying liquidity areas, I think can be extremely beneficial, because you can One on news. I did it yesterday. As you know now, I'm hedging a lot. During the news, I was like, I'm going to hedge, see the price action, see what happens, and then I'm going to move. And that's helped me personally a lot. But during news, everything that we do amplifies, because normally movements that you would see 1.5 days is happening within minutes and hours. So all your psychology, even though you were balanced, you said you were balanced, that balance is going to be a lot more balanced when it's away from news.
Yeah, also, if I reflect on that now, while going over the charts with you and how you drew this liquidity zone where I had the hard stop, I was balanced, like from the emotional and psychological point of view. But what I do see now, reflecting on this, is that I did get some kind of like channel focus because of this news event. So I was trying to reposition within that window where it was already extreme, and there was a higher time frame level where I was then applying the logic of the move that had already happened. Like it already went so far. This is a logical level where it will reverse. And I guess I kind of forgot to look at that higher time frame objectively without that news event.
Yeah, I think regardless of news, always have an idea, where are we? Literally, what date are we in? Are we in December? The assets move different in December, in November. Are we approaching Christmas? These sort of bigger macro. Is it August? Do we avoid trading August like ICT says? Yeah. I found that this year, August was my worst month. So I will be taking that into account in the future. Have a picture of the year, because we need to know that. Then moving down, where are we in terms of, like we looked at the dailies. We saw those 4 candles going down. So there must be a pullback. Or you might be thinking this is the pullback to push, like you said, to fill down the fair value gap. Have that idea. Then you go down into sort of like your 15 minutes and hours. The event that we're going to look at, we know is going to be 4-hour difference in terms of what's going to be the outcome, because we know the first hour is pretty much manipulation. Second, third hour is positioning, and the fourth hour is a reveal of what's actually going to happen. And then with the historical data that we saw from Interactive Brokers. So then if we know all that, does it make sense for us to react within that hour? I would argue not, unless we want to pretty much gamble the way because it's a 50-50. So can we wait a little bit, even though everything looks perfect? Can we just wait a little bit longer to see what the move is? And yes, we're not going to get this huge 200 pips, but we'll be happy if we get 30, 40 pips and with not a lot of stress. And that's sort of the mentality around that. Awesome.
One more thing I wanted to add. This is also what makes the Vanguard so valuable for me, to be able to have this kind of talks with you and everyone else in the group. Yeah,
we do have some gems in there. I'm really, really happy about the community I was building. So hopefully it will keep going.
Cool. Thanks.
See you soon. Ta.
Good day.
Run it. I can't take no loss. I don't even know what it costs.